The SACCI Business Confidence Index dipped to 97.1 in January after increasing by 1.7 points in December to 99.1. This is the lowest level for the BCI since May 2010 when the BCI registered 96.7. Joining us in studio for more on this is Neren Rau. He's CEO of SACCI. Very warm welcome to you. Not very good numbers.
Yes, it's sad that we have to start the year on a fairly alarming note in terms of the BCI. Although poor performance by the BCI was not entirely unexpected, we do expect that the first 6 months of 2012 are going to be very challenging for business. We expect that the outlook will improve as we head towards the tail end of 2012, and the BCI has started the year by signaling that that is probably the outlook to accept. And we had hoped, though, it wouldn't start so poorly. It could have signaled the same message without being so low. We need to see this BCI speeding away from 100 on the upside, of course. And right now, we're testing levels that were close to 2010 levels, which is a very low base to compare the BCI to.
The financial services sector coming out quite positive, but you said if you were to compare it to previous indices, also not doing so good.
Quite right. The BCI is divided into two broad components: the measures that look at the real economy, where real economic activity takes place, and the measures that look at the financial components of our economy. The real economy components have performed dismally this time around, and that is deeply disturbing, because if we want to see a recovery take place, if we want to see improvements in our economic outlook, it needs to take place in that real economy component. And this time around, the picture is very bleak as compared to last month, but even if one looks at the recent history of the BCI, which wasn't great to start with. If you look at the financial component of the BCI, it generally follows the real economy component because the financial services sector is there to support the real economy. And this time around, we've seen that the real economy has dampened financial performance as measured by the BCI. And even the financial component this time around has performed poorly if one looks at it against the last few months of 2011. So from whichever point of view one looks at it, I'm afraid it's fairly bleak news in January.
One of the things that SACCI said is that that business is going to be looking at what's going to come out of the budget, is going to be looking at what comes out of the State of the Nation address. What are they going to be looking at specifically? Because there have been some comment that's already come out, some proposals that business is not too happy with. We've got this mining endowment happening, and there's been this talk of this super tax that already the mines are saying that could be a problem.
Definitely so. We left last year with a number of tax proposals being debated and discussed: a mining tax, a local business tax, and certainly in such constrained times, it's not appropriate to tax business even further. You're constraining its ability to perform and to create jobs. So our list, our expectations list for the State of the Nation address includes easing the business environment, particularly for SMEs. It includes creating a more conducive environment from the point of view of access to finance. It includes reducing the regulatory burden borne by business, but again, especially SMEs. We're also looking for some direction in terms of the key debates that we experienced last year and the years prior. What is government's broad policy direction, especially in relation to debates around nationalization, the National Health Insurance Scheme? Although there's some direction that's come out of that, we expect more to come out of the State of the Nation. I think it's not just business that's looking to the State of the Nation and the budget for clearer direction. I think the broader South African population is looking for that direction, which they didn't receive at the ANC centenary speech. So that is where the emphasis is right now. And we're also looking as a chamber for improvements on local service delivery and the local turnaround plan that's being implemented. And lastly, we're also looking for some report back in terms of government's performance management system, which it implemented a few years ago, where ministers and other officials at all levels of government sign performance contracts. I think it's time for the population to receive a report on that.
We have talked a little bit about the financial services sector coming out a little bit positive, not as good as it has in the past. Which were the sectors that were most concerning for you?
Well, within financial services, we measure 6 sub-indices within the BCI. The particularly negative one this time around was inflation, and that's not unexpected. We've breached the upper end of the inflation target range. The neutral readings came from private sector borrowing, real financing costs, and precious metal prices, and there were still positive readings from share prices and the exchange rate. And obviously, when we look at a positive reading from the exchange rate, we look at a stronger exchange rate as being positive. When one interprets this data or these movements, one has to realize that it's against a long-term trend. And generally speaking, for most economic variables, the long-term trend is up. So it's not a simple month-to-month comparison. It's an assessment of where the long-term trend indicates that these variables should be versus where they are right now.
I just want to cut you in there very quickly. We have to wrap now. You were saying that you are expecting the numbers to be better going forward. What is going to underline that?
Quite right. We are expecting to see improvements on the domestic economy, following on improvements in the global financial services environment.